What's going on, traders? Welcome back to another video. This video specifically, we're going to be walking you guys through bullish and bearish divergences. You can find bullish and bearish divergences using the relative strength indicator, or relative strength indicator. All right, so the RSI, you guys are familiar with this, at least some of you are. Some of you guys have watched previous videos from me, maybe somebody else, and we're going to walk you through the basics of the RSI if you're not familiar with it, and also make sure to go back and watch some of my other videos regarding RSI if you're not too caught up to speed. So let's get ahead and start sharing the screen. All right, here we are. We're sharing the screen. This is Netflix. This is a stock chart of Netflix. What we're first going to do is we're just going to touch on the basics of the RSI. All right, so RSI, ready? This 70 mark, this 30 mark. 30, when the RSI is below, it says that the price of the stock has been somewhat oversold. When it's up and over, where you can see right here, over the 70 mark, it's saying that the price of the stock has been overbought and it's time for it to relax and maybe sell off. Again, look over here, RSI says that the stock is overbought. It falls shortly after, saying that the stock is oversold down here and it has a slight bounce shortly after. All right, so now that you got the basics of it, that's what it is. This RSI is a momentum indicator, and it tracks when things are technically overbought or technically oversold. And that's how most people have been taught how to use the RSI, and most people typically do use the RSI. Well, I'm here to tell you that there's another way to use the RSI, which is theoretically the best way to use the RSI, in my opinion. And some will probably say the same. So it's good to understand what the RSI means in terms of overbought and oversold. What we have to understand, most importantly, is that the relative strength indicator is a momentum indicator, and it helps you track essentially momentum. So what we're going to talk about here is divergence, bearish and bullish divergence. And it's something that plays out on the RSI, and I believe it also plays out on the MACD. So if some of you guys use the MACD more than you use RSI, correct me if I'm wrong, but I'm pretty sure you can even do bullish and bearish divergence or track them using the MACD. So it's very similar in between the two, RSI and MACD. All right, so starting here, this is the RSI. And before we get there, generally, this is what's going on. When stock prices are going up, technically that would mean that you would think the momentum's going up, right? If something's going up, stock price is going up, then usually the momentum on the RSI would be going up. And then vice versa. If a stock price is going down, you would think when you look at the momentum would be going down. Just like you've seen literally right here, ready? And then momentum's kind of going down, right? You see that. Stock price decrease, momentum decrease, okay? What we're talking about in relation to divergence is this. What doesn't make sense? See, that makes sense. Stock price goes down, stock price is decreasing, momentum decreases. That makes sense. Got it? What we're looking for is what doesn't make sense. What doesn't make sense? What doesn't make sense is how can a car keep moving forward or in the going direction without any gas? How can it drive without gas? Gas for a vehicle is really the momentum. That's what gives it the momentum, that gasoline. So if a car is running out of gas, then its momentum should be slowing, thus its mile per hour and how fast it's going should be slowing, correct? Yeah, it makes sense. So what wouldn't make sense is a car going faster with no gasoline, or if it's drying up on gasoline, its momentum is running out. How can it keep going faster? It won't. It would eventually stop. Okay? So look at the RSI here, right? So price of Netflix shoots up, goes through a little dip, bounces again, and then it goes and kicks into a big downtrend. A signal that you could have paid attention to possibly give you some edge to understanding this, that this would double top out and then start fading down, is what we call a bearish divergence. Ready? Bearish divergence is when the price of the stock chart is going up and its momentum is going down. So how can the price of the stock keep increasing when momentum is slowly dying out of the stock? It won't make sense, right? So that's it. That doesn't make sense for Netflix to keep going higher as your momentum is slowing down. Now you see it. That's the divergence, okay? Ready? Here we go. So look at increase in Netflix, bounce and increase, while the momentum in that stock is starting to die out. So now you see it, price going up, momentum going down. Price going up, momentum going down. There's another great example of this on the daily chart with Netflix that we'll take a look at. Let me get there. Okay, right here. Literally right, and it's literally right in your face, okay? So let's look at it. Price of Netflix is increasing. Price of Netflix is still increasing, yet the momentum is starting to go down. Again, increase in price, momentum going down. It should not theoretically last. It's basically impossible for prices of stocks to keep going higher if no one's buying them and there's no momentum to drive them up. Now, this is a daily chart. It's actually the 4-hour chart it's more relevant. So watch what happens when we go to the 4-hour chart. Now it becomes pretty clear there might be a bearish divergence where we're seeing the price of Netflix increasing, yet RSI is decreasing. Momentum's decreasing. You see that, right? Look at that. Look at that price increase, and then look at the momentum dying out on Netflix. So unless something magical happens and there's some news that drives this price up higher, somehow a bunch of buyers want to all of a sudden start buying it and then squeeze the stock up, it will most likely continue to kind of fade out and drop. Now let's take a look back at the yearly chart. Let's go to the yearly chart. Why could this possibly, right? So now I want to talk about a little bit more about the RSI. Now you're thinking, okay, there's a bearish divergence. This is what I'm going to look for, when I'm trading stocks. Just know that a bearish divergence doesn't always play out, or a bullish divergence doesn't always play out. There's a lot of different factors, but this is commonly how people will use the RSI to, kind of judge how they're going to trade a stock, or if they're starting to see a bearish divergence while the stock is going up, they say, hey, this is running on a momentum. It's probably going to kind of roll over soon. All right. Now, understand the way things work and the way things flow. And this is something that I went over with our premium members here a little bit today. I was kind of on like a little spiel, and I'm going to spiel this out to you guys so that this hopefully kind of triggers a different train of thought when you guys are trading and when you go about trading. So look at this here, right? Everyone will always argue that a stock is going to break out because of this, or a stock is going to break down because of that, or the stock went up because of Trump, or the stock market went down because of the Democrats or the Republicans or Kim Jong-un or the Russian over in Russia, or the little homeless guy, on the sidewalk. That's why the market went down today. A million reasons why, okay? But let me just tell you that no one's ever truly right. No one's ever right to an extent that the markets move based on so many different catalysts that nobody's actually ever right, if you think about it, okay? If the market goes down because of Trump, one person thinks it goes down because of the Democrats. So what if it went down because of both of them? You know what I mean? So what I'm getting at here to clear this all up is look at Netflix here. You see how Netflix is kind of trading up and now it's kind of breaking down. Well, the other day, on our live stream, I said, hey guys, watch out for Netflix. It's in an ascending wedge pattern, and it's most likely going to be breaking down soon. And as you can see, it started to break down. Whether this goes full breakdown mode, we don't know for sure. That's basically what we're looking at. But what we do know clear is there was an ascending wedge pattern that did in fact break to the downside here. So does that make me right saying that the reason Netflix is breaking down is because an ascending wedge? Part of it, sure, but not all of it. Let's walk through all the things that could possibly be driving Netflix's price down here in the future. Well, let's take a look. Well, if we look at Netflix, we realize this is the 52-week high. Netflix has already had a really good bounce, and now it's all the way up into sellers. This is the seller area. So if Netflix is all the way in the seller area, wouldn't it make sense that something like a bearish pattern, maybe an ascending wedge, could possibly form here at the top? Yeah, it makes sense. Why not? I mean, if sellers mean bearish and bearish means down, it's more likely that those types of patterns may occur as you're getting up into an area of sellers. So is it really the ascending wedge that's the reason Netflix is going down, or is it simply just selling pressure? It's simply just selling pressure. And the ascending wedge here is an outcome of the selling pressure. Okay, let's continue let's continue even further. Oh, remember, didn't we say that maybe the 4-hour chart here had a bearish divergence? Oh yeah, there's a potential bearish divergence. So is it the bearish divergence that's taken the stock chart or the price of Netflix down? Possibly. I mean, I guess it could be. Someone could be paying attention to that, saying that's a bearish divergence, and that's the reason Netflix is going down. Now you're starting to get the point. There are so many different indicators, strategies, things to look at, things to comprehend, that nobody's actually ever really right. It's not just an ascending wedge that's taking Netflix down. It's not the fact that it's a bearish divergence. These are all just the things that add up when you're getting close to sellers, okay? So when you look back at the daily chart here of Netflix and you're starting to see it's all the way up near the 52-week high where we have a ton of resistance and a ton of sellers, it makes sense that a possible ascending bearish wedge pattern would form and that we might get a bearish divergence, because that's the sort of thing that makes sense to happen now that we're up towards all the sellers, okay? So enough of the spiel and enough of the lesson. I hope that helps. Just to recap here, remember this: bearish divergence, when price of the stock is going up, but your momentum indicators are going down. It's very hard for that stock to keep increasing while the momentum is dropping. And in vice versa, when the stock price is going down, but your momentum is picking up, that stock price will most likely not continue down if momentum is starting to pick up on that stock. And that is our lesson here for you, ladies and gentlemen and traders from the Boiler Room Trading here. Thank you guys once again for tuning in. It is always appreciated that you guys watch the videos. And if you can, thumbs up, like it, share it. If you head out the door, appreciate it. And as always, I will see you guys on the next one. So take care.